Hello everyone, welcome to today's video. Today is Monday, March 24th, 2014. Let's get right into these charts brought to you by xfactortrader.com. Let's go right into these charts. Start with the SPY. We had a nice sell-off today. Nothing really to write home about, but this was the first support I called off for intraday bounce. I believe in my last few videos. This double bottom here. Sure enough, got a nice dollar bounce off that intraday bottom. That was a very nice scalp play. You could have entered right here. Let's scroll back earlier in the morning of this morning sell-off. Got a nice little reversal candle here, and sure enough, tried to shake you out here, retest of that low. Never closed below that. So, and after that, it signaled a nice buy right into the 50 moving average on a 10-minute chart. So this is a 10-minute chart, guys. So every candle you see on an intraday basis is a 10-minute candle. So we had a nice little day trade there for a nice profit that I took earlier in the day. Just a really low risk reward. Once you test the low of the day like this on lighter volume, the volume gets lighter during the afternoon, so it's very hard for the market to sell off. And sure enough, the sellers just weren't there, and it retested that double bottom here and tried to shake you up, and that was a nice run into the end of the day. And you can see a little bit of profit taking at the end of the close. Let's look at the daily chart again. Once again, that level is beautiful. I called this out. Nice. I drew a line right across there too as well. Drew a trend line there, and we're getting a nice bounce off there. The next spot really for the same kind of play, nice intraday play, would be the 50-day moving average, which right now it sits currently. This will be rising as the days come, but 183.70. I'm sorry, 183.37. That's your next scalping level for similar to what we got today. A nice little day trade, little scalp there. This is gonna be minor now because we did make a nice pattern, and this could be playing out. This actually measures out roughly a little bit below that. So any pairs you could probably play for a full day, 182.81. That level, it lines up with this pivot as well, but nothing really to hold long term. Just keep it short term on the long side. Right now, it's probably smarter to accumulating shorts probably for 7 days trade. Right now, the chart is presenting itself favoring the downside slightly, but let's see if we break this trend line into 50. Once we break these levels, yeah, it's a race to the downside to this 200. Okay, that's when you should start looking. Right now, and we're still above this January high, so nothing really. This is support actually. So if you actually wanted to play it and keep this as your stop, if you close back inside below these pivots, then you could stop out. But right now, it's still holding above this trend line over here. And look at the weekly chart; it's still uptrending. Nothing really to go crazy yet. Look at this massive uptrend. They say don't fight the trend. I mean, really, it's still up. But you just want to take pieces out of the market. Maybe if we made a signal here, maybe got a nice little topping candle here on the monthly chart, and then we could see a little more bearish signs. But right now, just not seeing them. Just seeing like the little day trades and little 1 and 2 day swings. That's all we're seeing. Let's look at the Qs. Pretty much the same deal. Get a nice bounce off the lows. But still trying to hold this area here. It did kind of break it and the 50, so that could be a sell signal on some of these tech stocks that are looking weaker. Twitter was pretty weak today, broke down the $50 level. Before we go to that, let's go to the IWM. IWM is pretty close to the double bottom as well, and it's bouncing off that. Nothing to write home about. It's pretty similar to the SPY chart, so same analysis here. Next support is going to be the 50, and ultimately if that breaks, you got some minor levels here. These little pivots here at 114 with the 50% retracement, but the major level, like I said, is going to be 200, and that's your next major spot right now. Okay, let's go look at some of these tech stocks. Look at Twitter. Twitter, I mentioned, it looked like it was going to bounce at the $50 level, but this was a second hit, so it's getting weak. It only got a 2-day hold, kind of stalled out here, and it got a little bounce here, baby bounce, and now it's got the 75% retracement. Now you start looking for like a longer term entry. Okay, right now anywhere here in mid 45s. Remember I mentioned that inside bar pattern. Remember I mentioned these are shorter term trades. If you guys follow my videos, that's what I mentioned. The monthly chart, that's their bigger time frame you want to mention that I'd like to mention, and that's where you want to get involved for a longer term entry. This is still a beautiful inside bar pattern playing out, and my entry will be anywhere at the low of this candle. I mentioned this, I believe, in my last video. Anywhere in the low 40s, 42. And your stop will be below $40 at a close. You can even use the all-time low at 39. But a lot of people are gonna, if they're short, they're gonna take profits here, and they have to recover buy back once it hits this level. And I think a lot of buyers will get involved too, just based off this pattern. It's just a psychological number. Right below this igniting bar where it's all started. I'll be getting involved right here as a buy on a longer term basis, maybe for a month or two. I think that would be a really, really decent spot on Twitter. Like I said, failing to hold that level, finally breaking down. That's why I only played as a scalp here. It actually bounced longer than I anticipated. It was a very scary morning when Twitter gapped down right here to that $50 level. But I was, man enough to step up and play as a scalp and got a nice few $100 gain here. For a nice scalp allowance, just a small amount, nothing too crazy. This was a very scary gap down. I believe that was off earnings. I'm not remembering exactly, but that was a scary gap down right into that $50 level. But I played it for a nice scalp there. So let's keep an eye on Twitter. Let's see if it comes up to these next levels. That's where I'm taking a look right now on Twitter. Let's look at Google really fast. Google, I believe, did test that 50-day, but it should be breaking down nicely now. As I said, it was the second hit off that 50-day moving average. And let's refresh the page and see if we can get that chart to punch up right now. So, guys, if you guys haven't checked out our website, xfactortrader.com, we offer a 15-day free trial at the moment. That trial is there for the taking right now, and we also just put out a free trade alert, and that was in the money nicely right now as a short, and I think that will play out beautifully in the coming weeks and coming months, and that's a beautiful setup on what is it? It's on Ford Motors, and I think you guys should definitely take advantage of that as that chart pattern plays out. There's still time to get in right now. It hasn't hit first target yet, but definitely that's something to look for in the coming days. Okay, guys. So that's out for you guys in the free trial and as a free trade alert at xfactortrader.com. Let's get right back to these charts, guys. There's a little blimp on my screen, and my phone's getting blown up for chart and stock advice. Right now, I got one on Amazon and what's this one? EA. I'm gonna go over those. Might as well. I'm gonna go over those right now. Since I'm on the computer right now. So that was Twitter's chart. Let's go over. Let's actually go over EA. EA is actually making a very nice topping tail pattern on the weekly chart. Call this out. One of my colleagues asked about this. I said, if it closes anywhere near 29.70, the lows of the day, and sure enough, what was that close? It was the low. The close was 29.75. So that was just generally 4 or 5 cents away from my recommendation to sell into next week because of this topping tail. I actually got another kind of a topping tail candle there. Let me zoom this in. The volume wasn't great, but the sellers sure enough did step in today off this sell candle here. I circled it earlier on a weekly chart. I don't know why it's different sized on this time frame at the moment. But look, this was what I was circling as it made a beautiful little topping tail there, and sure enough, we're getting follow through to the downside. I think longer term, it does potentially has more upside if it could hold a $28 level, but right now it needs to pull back. Look at this 200 moving average that's just been hammering on. I mean, this is going to be major in this trend line as well. This 200 is going to be major resistance. I mean, after that, it doesn't have anything until like 35, 40. So look at this previous support right here at $40, roughly 41.80. This was the breakdown. So once it retests that, it's going to be resistance after it was support on the upside. Okay. And obviously you got some small pivots here that don't play too much into it anymore, but 45, 35 will be the midway point to this area here, this kind of general vicinity. That's at the halfway point, so that's like 50% retracement pretty much off that move. And if it can clear this, consolidate more, then yeah, it has upside back up to $40. That's in a much longer term. Okay, right now it needs to pull back and consolidate. As after this big up move, it needs to digest that gain. Okay, let's go back to the weekly chart again. Once again, topping tail, getting a nice follow through. You have support here, the previous resistance. That should be support at $28, and then ultimately, if you want to pick it up for longer term, you have to look at these moving averages. See how it's riding it right here, how it caught resistance, caught support off these moving averages, and you're still having an uptrend. So $25, that's where your entry is. Let's grab a fib and see if we can get a fib. Just basically off this recent pivot, and that does come out to a 618 retrace too, right around 24. So you line up these charts, line up these fibs, line up these moving averages, line up the even number of $25. Let it pierce. It looks like this was an important level here. Let me draw that line in on EA. So these are the spots where you want to get involved. Most times people ask me, what do I do? What do I do with the stock? 99% of the time, there's nothing to do. You have to wait for a setup, wait for a pattern, and if it does present itself, that's when you get involved. So if it dropped nicely into this level, then I would say EA is a buy. Right now, it's more of a sell right now based off the sell signal. If you want to get back involved, you could enter on the halfway point, retest of $30. That's where you want to sell it. short. Right now, you'd be chasing it. It's pretty much into support now, so you got to be very careful. Your timing is very, very essential in trading and just trading management. Really, anybody can call it these levels, right? But you got to be able to actually maneuver and read every signal and trade it like a professional. And that's what we teach you at xfactortrader.com. Check it out. There's a 15-day free trial, and it's there for the taking. And there's already profits being made on our free trade alert. Okay, let's go to silver. Silver is a little weak. I actually was looking for a bounce here. I stopped out on the second half here in the morning. Actually it was pretty much almost break even trade. But that's just the way the cookie crumbles. I didn't get the bounce. See, this is where my money management, trade management comes into play. You could have taken this and just been stubborn. No, it's not bouncing. I said that I would expect a bounce already, and it did not bounce. That's where money management and just your rules come into play, and this is where you get out and you wait for the next level. What I'm seeing right now, the next level on silver is this gap fill. Comes out to a measured move, and I think the gap fill, that's where you get back in. I mean, if you're longer term, it's no big deal because silver it's gonna bounce eventually. So if you're a longer term trader, there's no problem. You could just hold it. There's nothing wrong here. And your gap window is at $19, and your next gap fill. Let me draw these in. So you got gap window 19. And then after that, you have the gap fill, the official gap fill, and lower gap fill. So this is your money shot right here at the SLV, right in this vicinity. Let me put a little circle there for you guys, so you guys know this is your money shot right here for a long entry. Beautiful spot right here on the SLV to the long side. Let's look at the weekly chart. The weekly chart does look like it's breaking down off that pattern. It's still good to go as long it's still inside this move. So it's retracing more than I anticipated. I thought it'd hold these moving averages, so it might want to go to these lows. That's why I called out this area here it's still nicely inside, trading inside this up move. So just keep in mind, now that it's not holding these two moving averages, the downtrend could be continuing. So just have to keep out for that. See, these moving averages are in a downward fashion, sloping downward. So that's when you look at a chart, that's always got to be one of the main things you look at. The first thing is your moving averages. Okay, so that's one thing to look after on SLV chart. Still consolidating here. This could be a triangle here, so they could break either way, and it usually does want to break in the direction of the trend. So, but for if you're longer term, $19 anywhere in there, 19.20 in that vicinity. I think it's okay to nibble for a nice little trade there. I'm sorry, the 18 or it's at 19.20 now. The trade probably for me, I'm getting involved is 18.50 right here. This gap fill. This you at least get another 1-2 day bounce as you did here, and that's when you take half off and let it run. Let it run. See what kind of move you can get. You can get a 5, 7, even 14-day, 2-week, 3-week move. Okay, you never know. That's why you have to. It's about managing your trade and playing the charts correctly. Okay, let's go to Amazon. Amazon, beautiful, beautiful bearish flag. This was one of my favorite ones. Amazon and Ford. Ford was the actual one I gave out as a free alert, and we'll go over that. But look at this bear flag playing out on Amazon. Your first target, minor target, will be 337.14, which was the previous low. After we made that, that's going to be a major sell signal because a lot of people bought off this candle. A lot of people put their stops below this. So if that breaks, it's a race to the downside to this 50. Okay, and this 50 will be pretty major. It's going to be major. It's going to stall out here. I mean, it's a major moving average. It's a major stock. It's uptrending still. So this is a nice 1 to 2 day swing here on Amazon. But ultimately, it can go a little bit lower off this measured move. Why don't I just draw it in really fast? Let's see if I can get a measured move really quickly. Just take the high here and just measure, this leg, and then measure the next one down. It does take you to the 25%. Is that only the 25% retracement? Wow. I mean, Amazon has just been on a tear. No, let's see. Let's grab it. Let's just grab it the other way. I've been grabbing the fib the other way because it never falls. So now we could actually grab the fib from this direction because Amazon is just going in a straight line to the upside. Okay, let's grab the fib from this high here and see what kind of fib we're getting actually. Roughly, it looks like a 3. Let's see, not even. Yeah, it looks like a 25% retracement. Not even. No, this is a big fib level, so it's getting from a really big long-term pivot. So, but I like to do that. Us at 2009 low, that's why. But hey, really from 2009, 2008, it's really just been uptrending straight up. So I haven't been grabbing the fib the other way because it just won't fall. But here we go. Here's the 25% retracement here on Amazon 312, 314 appears to the 50-day. That's your measured move as well. So that's your spot. That's your next target. If this pattern does play out on Amazon, it does need to pull back. It's just been on a tear for the last few years. So Amazon does need to pull back. Let's look at what else. Let's look at Ford. Let's look at Ford. That's one of my favorite shorts at the moment, and I think this pattern could really play it out. Nothing really to write home yet about until it breaks this trend line, but the weekly chart. If you don't see anything in the weekly chart, like I don't know what you're looking at. Look at this nice bear flag and a death cross already took place 2 weeks ago. Death cross. So this has to continue to play out. You want to see this 20-week moving average decline, and eventually this 50 to flatten out and start declining as well, and then you start getting a nice little downtrend there. And this pattern should play out nicely. Look at this, nice bear flag. First target 1330, which is the 200-week moving average. Second target, which fulfills the head and shoulder pattern. That measured move takes you to 1235 as a second target, which is also a 618 Fibonacci retracement. I think there you could actually pick it up. You can, if you're very aggressive, you could take that on the long side. You can change directions. If you're a trader, don't care if the stock market is going up or down. A stock, you could play it on either side, both sides, to profit beautifully. Let's look at Facebook, and I think I'll take off on Facebook. Facebook's playing out beautifully as well, just as I mentioned. It looked toppy. They looked tired. On the daily chart, it did make that small head and shoulder pattern, and I drew this out. I mean, go back to my last few videos. This is not just land of make believe where I'm just making guesses. Even a broken a clock would be right half the time, right? But if you're making calls at this precision, at this much accuracy, you have to really just take note and really take time and learn these charts. I mean, seriously, I drew this head and shoulder, small head and shoulder pattern. So now it's playing out. And I said my first target was a 50-day. Said that would be minor, and ultimately this is your target right here for the head and shoulder, $62. So you could definitely look to pick it up there for a short-term bounce, but that is your first target. I already hit the first target here. Your second target would be this consolidation here at the $62.10, roughly in that area. Let's look at the weekly chart and see if there's anything else at that spot. Yeah, you have some, you have the 13 EMA, the Bollinger Band high there. So when you break above the Bollinger, well, actually the Bollinger Band's up here. What is this? I think this is the 13 EMA. So if you follow exponential moving averages, I follow the 13. Seems like it's a pretty good way to read the trend and see how it bounced off at here, and now it's bouncing off there again. But now noticing that 13 EMA is flattening out. So when you see a moving average flattening out like that, you just have to keep caution, keep an eye on that. See, you have the 20 still rising. These are the simple days. The blue and the green are my simple days, and they're still rising beautifully, trending up. You have to extend this trend line. It's still so. Look for this trend line here to be hit. It did look tired here, and that's what we're getting. We're getting a nice pullback. And I think I'll just close on Facebook. It's been a beautiful week so far. Beautiful Monday. Nice profits on the SPY scalp. And I will be calling those out in the chat room once the service is ready. Right now, X Factor Trader is just launching, and I'm very excited about that. So do check out our website, xfactortrader.com. We'll be putting out more free alerts for you guys to profit and just guys see how good we trade. We trade with an 80 to 90% accuracy, and love if you guys give us a test drive. Okay, guys, hope you guys have a great Monday. I will talk to you guys soon.